Thanks again for joining. We'll hop right in. Thank you everyone for joining the webinar today on why embedded finance is so popular right now. My name is Alfredo Jimenez. I'm the VP of Revenue at Pipe. It's great to see so many of you guys here today. Today we're going to be zeroing in specifically on embedded capital. And I'm really looking forward to exploring this topic with our amazing guests and of course, all of you. Now to introduce our guests, first we have Luke Voiles, who's the CEO of Pipe. He brings a wealth of experience in fintech. He's been instrumental in shaping innovative financial solutions at multiple fintechs. Alongside Luke, we are joined by Tom Priore, who's the CEO of Priority, and who's played a pivotal role in the evolution of payment facilitation and has invaluable insights in the fintech landscape. Now, Luke and Tom, before we jump into the discussion, would love to hear a little bit about your background and your journey in the fintech space so far. Maybe we start with you, Luke.
Yeah, sure. So I sort of had two careers. I spent about a decade as a distressed credit investor. So it was at Sixth Street Partners, TPG Capital. We bought a bunch of bad loans from banks. So spent a long time working with some pretty smart people, just like figuring out credit, figuring out risk. And then I had a big career shift, went to Intuit to build a new business from scratch called QuickBooks Capital. And so we went from 0 to 2 billion in loans. We made it a 100 million revenue business, but we had access to the customers and the data. Solid lessons in purpose and mission-based leadership from the executives there, plus the customer focus from Scott Cook. And then I went to Square, where I learned how to build stuff fast, basically. So I was the GM of Square Banking. There was the Square Loans product, Square debit card and checking account, Square Savings, instant transfer. We were live in 4 geographies. Learned a lot about product velocity and how to build teams to scale stuff. I've been at Pipe now for about a year. Excited to lead this team and push on embedded financial services.
Nice. And Tom?
Yeah, so Priority was founded about 19 years ago. And, the vision at the time was, I'll say software and payments was kind of its in early stages of, converging. And there wasn't great technology, and I describe this as to activate merchant networks, particularly for resellers in the space. So we started building tools that would be more horizontally focused to allow resellers to activate their merchant networks, not just for acquiring, but for other, really adjacent tools to solve business problems for small merchants. And as that evolved, we really recognized that payments, banking, and software, or software payments and banking, really needed to actually become one thing. And that's where we started on a journey to bring embedded finance into our domain in payments, and bring banking as a service tools and a platform to apply those tools across a broader array of market verticals for SMB acquiring, for B2B payments, and for enterprise payments. And one of the things we're really excited about this partnership is we see that there's a very common vision around monetizing commerce networks. We all sit, whether we're an ISV, a reseller, an ISO, or even just a big merchant. We're sitting in a commerce network that just kind of demands modern tools to really tap into its potential. And we think access to working capital fast, when you need it, on demand, is a really important component of a thriving business. And that's what this combination really, I think, affords us as a partner with Pipe to bring those tools to the customer experience. Right now we have about 800,000 customers across our platform that we'll start with our SMB segment, but we really see this as a solution that probably extends well beyond, particularly because of the vision that Luke and the leadership team at Pipe have for embedded finance.
Yeah, definitely. Thank you both for your background. And Tom, we are also very excited to partner with you guys. So I want to hop into our first topic, which is around the major trends in embedded finance and lending. Obviously, the landscape has shifted quickly. And I'm curious, specifically starting with Luke, what are the major trends that you're currently seeing in the embedded finance and lending space?
It's interesting. Like Tom just hit on like the main theme, but let me tell this sort of the same story but with an underlying customer as the focus, just to like lay it all out and make it seem more real, I guess. Like these customer stories like just help me think through stuff, right? So if you think about a coffee shop like 20 years ago, and like they're selling 1,000 coffees a day, they have their espresso machine, they're trying to run their business, they have a cash till, they even take checks. Like people are standing there writing a check to buy a coffee. Like that happened 20 years ago, right? And so people, those business owners running those businesses had to go to the bank. Like they had to go get cash for the next day. They had to figure out a way to track the data to get it to their accountant. Like how can I track these bills? How do I pay these bills? Well, I got one in the mail. I'm going to write a check and pay that bill. It was all very, very manual, and very check based and like some cash based for the stuff in person. And then they hired a local accountant that just gathered all the receipts and the data in a shoebox, literally, and would like try to figure out what the heck to do with that stuff. Like that was like, I'll go back to Intuit real quick, and like it started in '84, right? And so that trend, the first trend really is this horizontal, and Tom, you mentioned it too, the horizontal to help you track some of the data, help you maybe reconcile some transactions from bank data to create entries in the general ledger, like to do some stuff for the business, right? But like every part of that, like the pain points for that business have been shifting pretty dramatically over time. With now we're at the world where we have verticalized tools, like Slice is a good example, I guess. Another startup I just saw raised money focused on coffee shops, actually. I saw the news yesterday on that, to focus on the end-to-end pain points of coffee shop. And so what's happening is those business owners now have these amazing tools that solve all of the pain points of a very specific industry, right? And so like that's the customer experience and the tasks that have to be completed on a day-to-day basis for a specific business type. I think the shift now is the stuff that like Priority enables, right? And some of the stuff that Pipe enables, where those end-to-end verticalized problems can be solved so well by these very focused like customer research and design teams that are very high tech. But all the embedded financial stuff, like all the stuff that they had to do at the bank or used to do at the bank, collecting payments is where you start. Like, how do I just accept a credit card? Like, Priority enables that. Well, if I need to pay a bill, Priority has that too. Like, if you need to pay a bill, we have bill pay. They have bill pay services, right? So, all of these tools are starting to come together finally to the verticalized pieces, because the verticals have been so focused on the pain points. Now the horizontal embedded financial services are finally connecting the dots to where you can literally use one tool now as a business owner, and all of the financial stuff comes along with it. And I'm just super excited about those trends finally coming together, because Priority's been doing it over here, empowering all the software, and finally the software is verticalized, and now it's all coming together, and it's going to create frankly magical experiences for that business owner to just be able to do whatever they want whenever they want in that one like mobile app, like just to run their entire business and have everything happen in that one spot and have everything at their fingertips. So for me, it's just like 20 years or 25 years of trends pushing together finally, and cover more than that, like 40 years of trends coming together to like actually create these things that are so useful for business owners, frankly, so they can just go spend more time with their families, right? Like that's what they want to do. They don't want to spend time doing all that. They don't want to write a check. They want to go hang out with their kids and watch their kids play soccer, right? Like that's the difference. So, like I'm so excited about these trends and all of these tools coming together to actually power this stuff.
Definitely, definitely. Tom, I'm curious from your side, given the kind of the experience with the payment side, what are you seeing as in terms of appetite for embedded financing?
Yeah, I mean, look, I think it all comes down to really two elements that are, by the way, these are germane to every business. I'm going to digress for a minute because I'll tell you what kind of got me excited about this segment. My background was in structured finance and in investment banking. All right, so let's go back to like for those of us who, you go talk to your parents about doing their first mortgage loan. It was paper, it took weeks, et cetera. Well, what accelerated cash flow in that segment, which, hey, if I'm a home buyer, I just want to know I have the money and I can buy the home and I get my family moved in and it's an easier experience, right? Well, what I regularized that process of getting access to capital. Okay. And that's actually what got me excited about payments was that whole notion didn't even exist. And it wasn't like you were doing something complex. You were trying to get a merchant processing account. Okay. Luke really spoke in detail about this, right? Go back 25 years. There was no regularization to how I took money in and then how money flowed through my business. Well, the cool thing about payments and what's been exciting over the last 20 years is the rate of change. We're now at a point where it's an expectation then my cash flow should get to me fast, and I should be able to do what I want with it when I want it, when I want to. Because yeah, to Luke's point, I want to run a successful business, but I don't want that to be my only part of my life. I don't want to chase around these, like these things I shouldn't have to. And what's changed now is, hey, that is all happening in one place. We call it unified commerce, right? Where payments, banking, payables is all connected on a single platform. And a big part of that is, hey, I need access to capital when I need it. I should be able to access that just by going to talk to someone about like, hey, here's the cash flow through my business. I need some excess because I want to do X, Y, or Z. I want to make a big purchase. I want to buy inventory because I've got a big sale. I want to prepay a supplier because it's a really good deal for me, and that's going to help me increase the margin of my business. That unlocks all of those decisions really simply. And that's what I think is gathering excitement. It's all about like, hey, I can accelerate cash flow. I can optimize my working capital. And I don't care what business you're in, you want that. You need that.
Indeed, indeed. Couldn't agree more. It actually leads us into our second topic, which is capital as a gateway, specifically to embedded financial products. So, obviously there's a ton of products that are encompassed in embedded financing. Embedded capital, though, is a great starting point to help increase financial access, as you guys have alluded here over the last few minutes. I'd love to get a little bit more insight into kind of why we feel that embedded capital specifically is a perfect gateway to a wider range of financial products. Luke, what are your thoughts on that?
I've been doing small business lending for a long time now. I've like started out on the credit side, like buying loans that other people had originated and underwriting, and then originating a ton of loans through both Square and Intuit and now Pipe. Like but it's all just numbers until you think about what that money's actually being used for, right? The thing that like just completely like lit my brain up and locked it in was during PPP. Like I don't know if folks remember, like when COVID started, you could look down your main street and not a single door was open. Every business was closed. Nobody is taking payments. What are those business owners going to do, right? They can't go to the grocery store and buy food because they don't have any money coming in because everything is stopped. Like that's when it's an emergency moment. Like this is just the most acute version of what it means to need access to capital, right? Like those businesses couldn't do anything unless they got something. Yes, the government stepped in and helped on the PPP side, and we deployed billions of dollars to go help those businesses. But that same acute pain point happens almost every day when the business thinks, you know what, like I'd love to grow this business, but I can't afford the other espresso machine, or I can't afford to outfit the new restaurant to go build this next thing. And so access to capital becomes a constraint. Or you know what? I had a crazy, weird like leak that happened and my business was closed for a week. I'm not gonna be able to make payroll if I don't get an emergency line right now to go pay that payroll. If I don't have that security blanket to go pay the payroll, like just can't pay the bills. And if you can't pay the bills, you don't need like the employees then can't get paid to go put food on the table. Like so, like access to capital can be this very acute thing on the downside and a very acute thing on the upside to constrain growth if you don't have it. And so like this is a very like acute version of the story, but like the surveys all show the same thing. We've done so many surveys across hundreds of thousands of or millions of small business customers, actually, the places I've been, and access to capital always hits the top of the list. And because access to capital is the biggest pain point, it is the thing that will change user behavior. They will switch their payments processor if they know they can get easier access to capital. They will deal with writing checks and getting paper bill pay because they're used to it. And there's not something that's going to push them over the edge to go do a brand new modern bill pay setup. But when they need capital, they're going to make a change to make it happen. So capital is such a huge benefit that it changes behavior of the underlying businesses and makes them move and go do other things to like make everything work better. So for me, because of that acute pain point, because of the like all of these, I've seen so many stories like this where it helps so much or in so many different scenarios, like that is a behavior changer and it just solves the biggest problem. And so that's why capital for me is the most interesting thing to focus on because it really helps people and it really can change behavior and make things happen. So that's how I think about that part.
And let me
Of
offer up,
course.
like, this is two interesting stats. Just think about this for a second, okay? Small businesses account for over 50% of US GDP, Okay, fact. Closer to 60%. Okay, so there's a lot of successful small businesses. They constitute the majority of employment in the United States. The average small business has less than 60 days of working capital. That's it right there. These are good cash flowing businesses when they're operating, but that's how they're sustaining their life. So they don't have ready access to larger pools of working capital. You unlock that, that's 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 everything. That's gas in the tank.
It certainly is. And I do want to touch a little bit more on that point specifically. So obviously the benefit is there for the end user small business here. But Tom, given that you've partnered with Pipe, I think you understand the value of offering embedded capital, but very curious on your thoughts as far as how that embedded capital offering can help improve customer relationships and drive faster growth for companies that are considering maybe implementing an embedded capital solution.
Well, look, I'll submit to you, and I want to give you a little bit of history of how we arrived here. I personally am not a big fan of merchant cash advance. I don't like the market in the way it's positioned to small businesses. I think the terms are largely egregious. We have been reticent to go out with a program to our resellers whose brand we value. The thing that's differentiated about Pipe, and I really encourage Luke, I'd love him to follow up just on the structure of this, is while it's oriented like an advance, it's really built as a financing partnership that is it's a line of credit. Unlike others in the space, it also isn't a one-hit wonder, as I like to say. It's like, hey, I'm going to charge you a bunch because you really need something right now. Luke alluded to it. I need a new pizza oven. I need to make some repairs. So I'm going to hold you over the barrel because I can. When in reality, what you need is, I need a partner I can actually expand with. So I'll get this online. It's a line I can use, pay down, use again. It's dynamic. And I think that's really the most interesting part about it, is it's really more of a dynamic, very bank-like product. And that's
Tom,
what
I'm going
we're
to take
enthusiastic about bringing it to market.
Tom, I'm going to take that snippet there and send it out as part of our resources. That's perfect.
Let me just pile on. Like the way I've described it in the past is that, like, businesses don't just want money. What they want is a security blanket. They want to know that they have access to capital whenever they need it. So it's more like an insurance policy if you really think about it. Like with insurance, you pay premiums all the time, and when you have the emergency, you can draw the money. Loans are the same thing, but opposite. Like you can have a security blanket there, knowing it's there, and you don't ever pay anything until you draw it down. We were very, very thoughtful about how we structured the product because we know what the small business owner wants, and they want that security blanket. They don't want to pay an unused line fee equivalent. They just want to know that based on the daily underwrite of what my historical cash flows look like, this is what I qualify for right now. And I know I can get it whenever I need it. It just makes you feel secure, right? And that's what the business owner wants to feel. If you have that security blanket, it works. Everything else is just semantics. Like the customer experience matters. We can create risk in the background that we know the capital markets likes by structuring it in a certain way. And yes, maybe it's frankly, like, just disaggregate everything. It really is just the hold rate mechanism to be able to lend against the cash flows and be in the payment stream and get paid back from that cash flow stream. Number one, makes it a super seamless, like, product for the business owner, again, because they don't have to think about paying it back. If they have a slow 90 days, they're paying you less money and it's easy for them. That's why the PRS in these products can be like 80 in the 80s. Like the businesses just love them. So like focusing on the customer experience and designing a product that really helps that small business was the number one thing. Everything else is the cool part about fintech, which is do everything else in the background that makes it regulatorily compliant, that makes the risk make sense, but still give the business exactly what they want. And that's what we designed here at Pipe. And I love it.
Yeah, and I just feel the need to put a fine point on this because this happens down on Main Street, right? These are real world issues for business owners, right? And we consider our reselling partners, we don't call them ISOs, they're reselling partners. they're partners out to the businesses that they serve. So for them, for the ISVs we serve, to be able to bring a product that has that orientation of, hey, it's going to recognize when your cash flow has gone up and down. It's going to adjust, self-correct for those instances so that you can utilize it, utilize it again. That may not be the same every time. You're not forced into a box that becomes unmanageable. That's why this is so unique. And I'm really right now speaking to the audience at Priority because I want them to appreciate, hey, this gives you that partnership orientation that I know is so important, not just for us to you, but for you to the merchants that are your are your commerce network.
Definitely. Again, I think we can all agree that a seamless and flexible product for the merchants is ultimately what we are offering. But I do want to hop onto our next topic, because obviously you want the benefits for the merchants, you want the great experience for the merchants, but there's also the impact that embedded finance and specifically embedded capital can have on our partners that are embedding capital in their solutions. And around the impact to like revenue, GPV, acquisition, retention, these metrics are important for our partners. And Tom, I want to kind of go to you and think, what are some examples where these metrics can be positively impacted by introducing embedded finance solutions?
Look, our entire business, right, is really based off of the lifetime value of a customer. I mean, if you think about it, in the merchant acquiring space, we're, oftentimes we're picking up, pennies and nickels in front of steamrollers. So it's important that that relationship live on. And, at Priority, our attrition is actually quite good. We probably have attrition that's half the industry average. In fact, not probably, I know we do. We're 10, 12% typically in an industry that attrits at 24%. But what we've seen is when you add a second product, so let's call lending a second product to acquiring, attrition drops by half. Well, that's not customers leaving you. That's the normal rate of people going out of business. And you have very, very low attrition of folks actually leaving. The other thing that I think is exceedingly important about this is, well, you're putting gas in that tank, and you would expect their revenue to grow as a result of that. So you'll display on those customers taking advantage of capital, negative attrition, because their volumes will go up on card because the business is actually doing better because they have more resources. So we think this one in particular is exceedingly important to driving attrition and then the long-term customer value through the length of that relationship. And that's where the rubber meets the road at the end of the day. Obviously, margin's going to pick up because there are opportunities that you're just providing more. But, those are kind of, I'll say, secondary to the fact that that customer just lives on longer.
Definitely. Luke, curious on your thoughts here.
I mean, I've seen the data at both Intuit and Square. Like if a customer has it, it's exactly what you just said. It's whatever the second product is, it doesn't matter. If it's one that they like, retention is double. It's so much better, and the customers stay. That means GPV grows, the volume increases, and so to the point about like negative retention, you're retaining up more than 100% of the GPV of that customer base, even with attrition in those populations, because the businesses that stay are growing faster. Right. And so same exact thing Tom just said. I've just seen it in practice, and it's right. And just think about it in terms of that coffee shop owner or customer. They can draw down if they have $1 million in revenue coming in at that one location, they can borrow 100,000 because it's so easy to predict the future cash flows when you sell 1,000 coffees a day. That's why this model works so well. You can loan them 100,000 or advance them $100,000, and that's a lot for a coffee shop. You can actually go outfit a whole second location, like sign the lease and start to outfit that location and frankly double your business if you can do that. Or it could be smaller stuff, just upgrading the decor, making it a better spot. But these amounts of money are pretty amazing because these businesses are mostly so small they can't access capital anywhere else, and it really enables them to start scaling their business fundamentally. And I said it before, like the PR, like the product recommendation score, which is like, do people actually like this product? I challenge anyone to go look at what Bank's PRS looks like. It is awful. This product is in the 80s. It's insane. Like it's just such an easy one to use. It's automatic. It's 3 clicks to get it. The security blanket follows you around. You feel good. When you draw it down, it pays back automatically. Like all of these things go to make a magical experience, and it gets fully embedded in the thing you're going to every day. So for me, like that's the impact. It really helps these businesses grow.
Yeah, and I'll tell you, I'm a numbers guy. And the numbers are, Luke just alluded, people don't like their bank. The numbers are this: 90% of small businesses do not like their bank. Fact. And the crazy thing about it, that's a study by a bank. So it says it all right there. They know they're losing on Main Street. Why? I hold your money, I charge you fees, and I don't give you money. Well, the biggest thing that we can solve is, hey, let's get them access to funds, right? Let's get them their money fast. They're going to be a lot less sensitive around, you know what? Because that was value, that was worth it. I'm not worried about how much it cost me because I got value. And that's all customers want. They want value.
Definitely, definitely. Um, you know, we've talked a lot about the why of embedded financing, and I think again it's very clear the value of it. Um, I do want to drill down a little bit about the how. So some of our guests may be thinking that this sounds like a big undertaking and that they have to build out a full financing product and hire a capital markets team and a compliance team. And it's quite a lot. But I do want to drill down a little bit about what it looks like to actually launch an embedded capital. Tom, you have experience with this firsthand. From your perspective, how can PayFacs and ISVs best navigate a launch of an embedded finance product?
Okay, I mean, that's the beauty of it, right? It's turnkey. The complexity of having a warehouse facility to deposit these loans, having scalability to the financing, that's all been abstracted from, that's the fin part, that's all been extracted from the tech. And the tech is simple. If you're passing the right information around customer health, right? What's my cash flow? Well, I have that. I've complied with, other requirements for origination. Like, is the business legit? Tax ID, things that we're normally doing for AML, OFAC, KYC. There's really no, there's no additional hurdles. It's just access to information on cash flow, and you get up and running really, really quickly, and you don't have to worry about any of the fin part of fintech. And that's what was music to our ears. Because we usually have to do a lot of gymnastics for that. And here, you don't. We certainly didn't. And you can get up and running fast with simple campaigns, while all of those origination capabilities, and we're in the midst of it right now, get embedded into your customer experience. So, for us, we have a product called MX Merchant. In our MX Merchant suite, you'll see your offering every single day. So, for those ISVs out there that want the full commerce experience, we bring the AR and the AP side, and pipe slots right in with the access to capital piece. It makes it a breeze.
Indeed. It's always great when someone can handle the fin part of it. Luke, do you want to walk us a little bit what the actual implementation could look like, especially in the world of modern APIs?
Yeah, I can do it. I guess there's really 3 ways you can do it. And one is just referral, where we can take the leads. It's a pipe hosted experience. It's like worst customer experience to best customer experience. The customer has to enter all the information because we don't have the pre-approved offers to put in front of them ahead of time. And so yes, you can test and see what the demand is. And it's high because customers need access to capital. The second approach is a pipe hosted approach where there's one data API integration and a way just to change the bank account on the back end where the money flows to make it super seamless integration for the ISVs or the PayFacs. Where pipe hosts the experience, the pre-approved offers come in, you can automate the application to make it more like a 4 or 5 click type experience. But then the type of integration that Priority is working on right now is the deeper through the SDKs and APIs where the experience becomes part of the core software, which is MX Merchant. Like it's going to show up seamlessly there in a way that doesn't even look like pipes around. It's going to be Priority Capital, their product, to offer it to everyone who's already using the software, right? And so and accepting payments there. So frankly, the easiest thing to do is just use Priority because they've already done the integration. But after that, it's if you want to do test the embedded capital product outside of that, we can do that too, like through either of those three. But if you really want to control the experience and make it perfectly seamless, like a 3-click experience, it's got to be the deeper integration, which takes a little bit longer, but it's pretty easy still.
Sounds pretty easy to me. So, for our next section, really wanted to open up to our guests on an open Q&A session. We invite questions from our audience. You can submit them through the chat. Go ahead and type in a comment. And guys, this is your chance to engage directly with our experts, Luke and Tom. So feel free to ask any questions that you have.
Usually when I'm on a large team call, I actually just count to 30 until somebody like asks the first question, right? 'Cause sometimes people won't raise their hand.
Yeah, we're about 10 seconds now. We'll give it another 20, 25 seconds.
What are you most excited about, Tom, for the next 5 years, 10 years? Like when you look out, like what gets you excited? I'll ask the first question. Let's go with that.
I got to tell you, man, I think it's, as I said, that just this whole notion of um, of a commerce platform, right? I don't think there are people playing in that category, right? There's a lot of merchant acquiring solutions. There's some, payables opportunities out there. There's even, folks that are banking as a service. And I think the real opportunity is to just thread that experience into, one one location, one interaction for customers. That's where the future's headed, and I think there's very few people positioned, to deliver it. And that's, frankly, that's what gets me up every day. That's what's, gotten us super excited about what we're doing with you guys, because I think it just has, it has a different level of scale than a lot of the things that, that we see out there. How about you? Like, where do you think, man, I just think you guys have an amazing capital markets opportunity that, that frankly, a lot of people have not solved, and you got a really unique mousetrap for it.
I think the thing that I actually get the most excited about is the small business data problem. Yes, access to capital solves the biggest pain point. It is the highest lifetime value. If you take the risk, you can make higher revenue. So that can actually pay the bills for the business. But do you want to take that money and invest it in the cool new stuff? And for me, the coolest, newest thing is these verticalized data sets. I've never, in all the places I've worked, been able to get to 100% transaction coverage of a business. So to finally bring all of this stuff together in a way where you get 100% transaction coverage, and then look at the advances that have happened recently with AI, and then bringing those data sets together and creating a sidekick, frankly, that can everything we just talked about, like having the business owner write that check, to be able to just tell your phone, hey, you know what, go pay payroll. It's going to say, well, you don't have enough money. It's like, we'll draw down my safety blanket and go pay it. It's like, okay, done. Right. It just, that's the future that we're going to get to, where the interface changes, right? It changes to the way to just interact with your voice. And instead of looking at your phone, you get to talk to your sidekick, like what if it's in your glasses or in your ear pods or whatever. There's all kind, I'm a sci-fi geek. So I've seen all different versions of this. Some of them go the wrong way, but there's a good version of this future that I get excited about, right?
Yeah.
That's what I get most excited about.
Hey, by the way, we got
So
some questions that popped in
Yeah.
yeah,
the
we got
Q&A.
we got quite a few questions
Yeah, we had a dozen
within
out there.
the
You
30
want me to handle
seconds.
them?
Yeah, so there's kind of a few questions that are around the same topic, but we'll start with Ali. His question is, what are the principal challenges enterprises might face when integrating embedded finance solutions in the upcoming 2 years? And what are the strategies that could be employed to navigate these challenges effectively? Luke, do you want to maybe take that one?
I can take it. Like, I think fundamentally it depends on what your current stack looks like. Like a lot of the next step after doing this integration is to build awareness in your base. So if you have single sign-on across all of your services, it can be super easy to turn on access points across your whole base. Some famously have like 78 different softwares that they're trying to run, and they don't have a single access point. So like where you are in that journey from a software perspective of having a single experience for all of your underlying customers, that changes how hard or how easy it can be. The API integrations are relatively easy. Like we can iframe the entire experience where there's not much you have to do. It's like a single line of code that can turn everything on within your surface, right? And so for me, if you have like modern engineering teams, it's not that hard to do. We can even like abscond some engineers to you for a minute to help you do the API integrations, right? So that tech part's not the hard part. I think it's the 800,000 businesses that are using Tom's products all the time right now and Priority's products. They just need to know they have that security blanket. So there's going to be a bit of a lift to like make sure that every business owner understands that they have that security blanket. They can use it whenever they need it, right? So that's going to be a lift as well, but we're going to be all over it.
And there's some questions out there just about our tech and where it'll be integrated. So as Luke mentioned, it'll be integrated into MX Merchant. This will also be part of, those of you who are, really focused on some of the banking suite with Passport. You'll see this posted there as well, to really optimize its versatility. Hey, there's some questions in there, Luke, about what would like disqualify a deal, or, how does it compare to some of the other working capital solutions out there, that seems to be important among the audience too.
Yeah, let me hit that then. Like I could talk about this one for a whole hour. The beauty of this product is that you only need transaction history. 6 months of transaction history of seeing the 1,000 coffees come through. We don't pull FICO score. We don't need the bank data to underwrite the credit. We don't need commercial scores. We don't need anything else. You can literally look at transaction history and underwrite the future. It all comes down to the regularity of those transactions. So if it's a retail type business, that's perfect because they're doing hundreds of sales every day and taking credit cards every 5 minutes. Like restaurants, like just look down Main Street. Any of those businesses that are serving customers or consumers on an ongoing basis are doing regular credit card transactions. It gets a little lumpier if it's one invoice sent a week, or one, like especially if it's construction and it's like one big project every quarter. Like the product doesn't really work for those types of businesses. It's just the regular cash, it's the regular credit card transactions coming through. Any of them can be served. We have a minimum. So I guess the sweet spot to think about from a business size perspective, 100,000 in revenue, which is a very small business. Many sole props are in that category, all the way up to about 5 million in revenue. So loan sizes from 10,000 to 500,000. That's 90% of the businesses in the US. And so all it takes is regularity of cash flow coming in through that credit card channel. And it's just a super simple product in that sense. So for comparison to other products, many of them you actually have to understand the expenses for any other type of loan product. This one is so simple because the payments are coming out before the expenses. If you're going to lend to someone and actually be like after the expenses are coming out, so they're writing you a check every month or doing ACH every month to get paid back, you're behind the expenses, and you actually have to understand the margin of that business and then calculate a debt service coverage ratio to make sure there's enough money coming in to pay the loan payment, right? So it's just a much more complicated product. Figuring out the revenue from one source is what we're talking about here, like that credit card source, and then advancing against that cash flow stream makes it an easy it just narrows the problem set to solve the problem for more customers.
I see some questions out there from called the priority population. So I want to talk to a couple things that Luke highlighted. So because it speaks to why we've chosen to go this route and why we didn't decide to build it ourselves. Which, we've built a lot of tech. We certainly could have taken that approach. Although I would submit it's just a different business now. But what is the business? This is where banks fail. This is why the elegance of what's been put together with acquiring banking and payables is so smooth. is that, guys, you're to go and underwrite all of the expense structure of a business, and these are small businesses. Maybe the guy's got the wife on the payroll. Who knows? You don't have to deal with any of that. We don't have to try and understand the dynamics of how operating expenses are working because you're lending against cash flow. It's just simpler. And if you're a priority reseller and your customers are with priority, we already have all the data. So if you want to be a referral partner right away, talk to your relationship manager. That's already underway. We have done beta on customers that Priority owns directly to make sure we've refined this. But with a brief pause, this will all be integrated into the MX merchant experience. Get your customers on Passport so we can see the money flowing through. Leverage MX Merchant and all the data we already have, because we have all the historical data. We're passing that to Pipe so that they can get their origination analysis done and make an offer today. Boom, done. You want to access it? Great, do it. You don't? No problem. It's still there for you tomorrow, and the next day, and the next day, and the next day, until you want to use it. And as your business evolves and improves, guess what? Your credit availability goes up. So that's a constant feedback. So why didn't we build it ourselves? That's a massive undertaking. We're great at software, payments, and banking, but we finally found a partner that thinks the way we think. And we can always be a lender, which I would submit we probably ultimately will. How do we do that? We'll just put money in the financing facility at Pipe and help them grow their base of eligible origination and use it to push into our merchant base. So we get all the benefit of being a lender and the opportunities that would avail us with a partner that's just focused on creating an excellent experience for customers to have access to capital through a finance product. And that just makes more sense for everybody. And look, ultimately, we're very hopeful that Pipe's going to conclude, hey, you know what? You guys do an amazing job of banking as a service. We should marry these two things together and leverage the things that you do exceedingly well, So we're beginning that journey.
I mean, I can just pile on, like, lending is hard. Like, it's easy to deploy capital. It's hard to get paid back. We have 93 people on the team here at Pipe, and it takes every bit of that to run an at-scale business in the risk space like we're in. It's just not an easy thing to do. Fundamentally, it's not something anyone should undertake lightly. It's very, very difficult. You can just look at the quality of the executives that we've hired here at Pipe too, to see the amount of experience it actually takes to do this the right way and not mess it up. Because, like, yeah, it can seem all great and groovy for a minute, but if you mess it up, it all goes away really fast, and you have to be super careful. And so from a lending perspective, like, we've built the lending expertise. I don't want to build a payment processor or a card issuer. Like, that's not our skill set either. And so, like, Tom's been focused on some of these things for 20 years practically. And so, like, if you think about just like from a CEO's perspective, like, what makes sense to build, what makes sense to not build, and what's going to give you an advantage, or like just figuring it out, like taking like these fintech modules that like Priority's built some of, right? Off like from them to actually enable our other experience will help us go way faster too. Like, it would take us a decade to catch up trying to build this stuff, right? And so it just makes sense to use these things, right?
Definitely. I do want to touch on an additional question that came in from Ben. His question is, what is the next frontier of embedded finance beyond embedded payment, lending, and cash management? Luke, do you want to talk a little bit about kind of what that roadmap looks like?
I mean, if you just think about all the, like, back to the customer story, like, what tasks is a business owner completing related to money movement of any kind? It's money in, it's money out, and it's money storage, right? And so we've very much focused our advanced product on the money inside to make sure we can give people access to capital and credit. Most of Priority's like original stuff was focused on the money inside. Now they have a bunch of money out stuff to help you like simplify and manage the money going out as well. And they have money storage as well, and investment related stuff. And so, like, those are the main like blocks. If you just group them into big buckets, it's like having a credit card to actually go buy the coffee you need to sell in your coffee shop, and getting rewards tied to the things you spend your money on, where it just makes sense for your specific industry. Spend management, so 5 other people in your company can have access to those cards and go do the things you need to do. It helps you scale when you start to add those features. Full on bill pay, that like Priority has that already. Like, how do you get the invoices coming in that you know you have to pay, automate the ingestion, automate the payment, pay them in the right order, just make it super easy and seamless, right? All of that stuff. And then like payroll, even like many of these businesses have 4, 5, 6, 10 employees. Building an embedded experience where if payroll was part of MX Merchant or Passport 2, like you just turn it on and start using it. Like all that stuff just makes sense to come together into one commerce. Like think of it just like, I always go back to that customer. Like, what does that business owner need to do? Like all of those things related to money movement, they should be in one spot, right? And I already mentioned the thing I get super excited about, which is like the new interface and the AI sidekick and having it automatically manage all that stuff. That one's a little farther out, but it's pretty exciting to think about.
Yeah, look, I would, if I could loop all that into one category, because it's payables. That's the next frontier of embedded finance, because those are so diverse for many businesses, right? Payroll is ultimately a payable. But if I'm in hospitality, that looks different than if I'm running a landscape business. Because in my restaurant, I've got probably minimum wage employees and I'm generating tips. But if payables could work such that, hey, I've given my employee a, in our world, a passport account or a bank account that I'm now pushing their tips into, and I could also just drop their payroll into. The high probability is that individual working in a restaurant may be underbanked, may be unbanked. That's a great experience. If I'm in a salon and I'm really tipping out all the young ladies that are sitting in seats in my salon working each day, and I'm tipping them out and their payroll, that's a payable. That's a different kind of payable than paying for supplies, paying my vendors. So I think refining those tools on a single platform to make all those payables, that's the last mile. That's the last mile. Because I do think there's really good tools out there for AR, right? Software and payments, that's been, that's been around for a while. That's like a talk track everyone's all over. Finance, I think we've got, I just think we have the best solution in the market for it now. And this next piece is, hey, how do I bring these disparate payables in a really elegant interface? That's the big opportunity. Look, I can just tell you, we're going to capitalize on it. We're on that journey, because that's how you bring a commerce solution to bear, and not just a payables solution. Try and really focus on the revenue available for all the transactions that are happening in your commerce network.
Definitely. So we'll wrap up with one question. Tom, I see a lot of excitement from your priority partners and ISOs. They're asking questions around how they can get involved. Do you want to maybe give them a quick
Yeah.
example?
Hey, we're ready to rock and roll. That's why we're doing this. You guys are the best in the market. That's just a fact. We have the best reselling platform in the market for small businesses, and that's a result of our channel's forward-thinking ability and their work ethic. These tools are available to you now. Get in touch with your RM. You can start in on a referral basis. This is being embedded now. Okay. So you can kind of choose your adventure, as we like to say at Priority. And we'll help you do that. And you can see we've got a partner with a tremendous amount of intellectual horsepower. They've been at this successfully for quite some time. And this is going to be a really powerful combination for you to get out in the market with.
Definitely. Thank you for that, Tom. So as we wrap up, I want to thank both of you guys for your insightful contributions and of course our audience for their engaging questions. I hope today's discussion shed light on both future and present state of embedded finance. Thank you all for joining us, and we look forward to seeing you on our future events. By the way, to reiterate Tom's note, if you have interest from a priority standpoint, reach out to your RM. If you are an ISV or a PayFac that's interested in exploring embedded finance solutions, you're going to reach out to us directly at partnerships@pipe.com.